Testing, testing, testing. JB here. July 1st, 2022. Hope everybody's doing outstanding. It's been a frustrating week, I guess, is the way to describe it. Especially on the heels of last week where we had the huge upside and I was hoping some consolidation and then maybe some follow through and then move up into the 400s or 410 on the SPY. That did not happen. On the flip side, it's been a slow melt pretty much every session. Monday and Tuesday were pretty much identical, except Monday we had a gap higher, sold off into the red and chopped around. So we just, frustrating day. Tuesday, same thing, gap higher, tried to push into the green, sell off, and then we just melted lower for the rest of the day with no bids to be found, like watching an ice cube on a hot summer day. Wednesday, another frustrating day, just premium crush. I think I posted on Twitter. I said if you listen hard enough, you'll be able to hear the premiums coming out of the options. Wednesday on weekly options is usually the worst day for premium crush. And then we had the PCE numbers that came out 3 months in a row of declines, so monthly declines. But when you're looking at year over year, we're still in a historically high inflation situation. So markets bumped higher after the news at 8:30, reversed, and then just another rough session on Thursday. End of the first half, the worst the worst first half performance since 1962, or somewhere around there. And there's only been 5 occurrences in modern history where the markets have closed the first half down 15% plus. And if you saw the watch list this morning, it was a nice little piece in Market Watch. All 5 of those times saw the market close the second half in the green, and some of them came close to reversing all those losses. I'm not going to sit here and paint the rosy picture. There's a lot of issues going on right now, and I think the longer the markets struggle, the more there's inflation issues, the more there's the war in Ukraine. All these factors, it will just become one of these situations that's just going to come to be. We're going to have, if not already, we'll be in a recession. The Atlanta GDP number is now negative. It used to be it was 2%, then it's 1%. Now it's negative. So it's pretty much the next read. The second quarter GDP is going to be negative, and then you get back-to-back negative GDPs, quarter to quarter, and that's a recession. So we had one in 2020, but that was caused by COVID. So and we were quickly able to reverse that. Unfortunately, using free money, giving out stimulus checks, and the Fed just doing unprecedented accommodative measures, and a lot of what we're seeing today in the last, well, not today, but in the last couple months is the result of all those easy money policies that now we're scaling back on because of caused inflation, and we had logistical issues and things like that. All right, so really quick, and happy 4th of July, extended holiday weekend, so the markets will be closed on Monday. So just keep that in mind. I normally have a back half, top 5 stocks for the back half of 2021 or this will be 2022 webinar. In lieu of that, because right now if you just do scans on stocks, it's very hard to find gems because they're all pummeled. And it almost doesn't make sense if we're still in a situation where the markets, maybe we're going to fall into September and October. Is that it's probably not a smart thing to do some more top 5 stocks. So I'll probably just wait. But what I will do is I'll have a webinar on some of the names that I think will do well. I've been doing some research, some names that trade cash or less than their cash value. So it's pretty prevalent in the biotech space. And I've talked about this before. But there's actually some other names that trade, it's a $1 billion market cap and it has over $1 billion in cash. That does not jive in my head, but everything's been the proverbial thrown out with the bathwater. So even fundamentally sound stocks can just be sold off with the rest of the other names in the sector just because, So we'll see how this all plays out. Who posted it? I think, the first part of this is we have the multiple compression. So things were trading 10, 20, 30, 40, 50 times revenues. So now those names are not trading 10, 20, 30, 50 times revenues, and maybe they're trading 5 times or 2 times, and now you start looking at earnings. So EPS every quarter for the last 3 or so years, beats and raises. Now you see people coming down with the guidance, and it's almost like these companies are tripping over themselves to try and get out some updated guidance before they report earnings in the coming weeks, because they don't want to be the company that just totally disappoints in their stock. It's even more destroyed than it's already been. So we'll see how this all plays out. Hey, what's up, Z? So a couple of names, and unfortunately, I went and Travelzoo was a name. They announced a 1 million share buyback. The company has no debt, pretty much trades. I think half of their valuation is in cash. The headwind of travel coming back is something they're going to be able to ride. China, once the restrictions come back, and not it's not a huge part of their business. They used to have a Japan office. They got rid of that, but certainly it's just going to add to the atmosphere of travel, which I think just bodes well for Travelzoo. Not only that, sometimes maybe they're a acquisition target. So just based on the valuation of the fundamentals and it's returning to growth, great story. I thought it would trade 8, 9, 10 in the coming weeks. Still has an opportunity down here at $6, but that's why I went and got those calls. Expedia, kind of the same. Well, not Expedia, it's TripAdvisor, but I put Expedia up there because it's similar. You take a look at these names, and TripAdvisor, I think, has $600 million in cash. Is it a $2 billion company? Maybe it's $3 billion company. New CEO at the helm. Just one of those names, I think, and I've been saying it for a while, and of course the stock has not performed very well. But that name, once they start executing any kind of monetization strategy, the stock's 2 or 3 times from here. But we have to see how that plays out. Oh, DocuSign, there's some calls. So that was kind of the thought process there on TripAdvisor. It was over 20 to start the week, went all the way down to $17. So you're talking 15% of reversal just this week with no catalyst. So kind of again, just why I described this week is very frustrating. BHC, Bausch Health, used to be Bausch & Lomb, but they spun off their business. Company formerly known as Valiant Pharmaceuticals. They were tremendously debt-laden, so much debt that there was points that were thought they were going to go bankrupt. They had to liquidate. They had to sell off assets. They had to do some offerings to start to scale back their debt load, and they've finally done that over the last couple of years. And then they were able to spin off Bausch & Lomb. So with that, I think it was $700 million in cash. They were able to pay more debt down. So in the past, it used to be a huge debt story, and if rates are going up, that's not a good thing for a company that has lots of debt. But as they start to pay it off, I think the company trades like a quarter times revenues. I think they might do like $8 billion in revenues, and it's a $2 billion company. I can find that right now. I'm called undervalued in this market, but yeah, $2.5 billion market cap, $8.3 billion in revenues. So once they're able to flip the switch, pay off their debt, become a cash cow, could be one of those names, especially if things, once we start to bottom, a name I'll be watching. So that's why I edited the calls there. Not only that, John Papa's on the board of directors, or used to be. He was the CEO. He finally is leaving the company, and he was kind of the last piece of the stench from Valiant Pharmaceuticals. So that's some of the reason why the stock took off last week. I think at some point it's back over 9 and into 10 before option expiration on the Julys. So that's BHC. So Unity Software. If you take and I don't know what kind of piece did you read, and I forget his name. I don't even know if I have it up here. He's one of the old tech people. I wouldn't call him one of the old tech people. Chris Dixon, I think his name is. But he always writes some great pieces. Has been ahead of a lot of the switches in tech, part of Web 2.0, part of when people back in the day used to look at the internet, it was barely for mail. Maybe it was for Napster, getting your music, but nobody thought that it was going to take off like this, where you could buy something online, have it shipped to you, all these other things. So if you read some of his pieces, he's really big into this Web 3.0, and you hear all this stuff on it. But if it does switch to become as big as Web 2.0, so the shift from the internet to Web 2.0, then from Web 2.0 to 3.0, you got to look at some of these names. Of course, Roblox is one of them. Facebook probably is going to try and take advantage of it. But that, to me, you want to try and find names that are undiscovered or undervalued based on the premise of it taking off. So I'm not saying you is part of the 3.0 outlet there, but the way their software allows you to make apps and things like that, I think it's certainly going to benefit. So that's why I continue to look for that one. And every time the market finds a bounce or a squeeze, the thing takes off 5-10%. It did it last week. I think it was up 20-something% the week before. So unfortunately, go and get those 40 strikes, goes up to 37 and change, fades, gaps lower this morning, then opens, goes all the way up to 39 and change. My calls were green for a minute, course, in hindsight, I should have sold them, but I thought maybe it's if you can get over 39.68 or so, it would have went up to 41. Did not happen, so I'm sitting here. I've been doing this for a while, so it's sometimes these weeklies don't pay off. Some when they do, 10 bags more than offsets. That was kind of the thought process on that one. And then last but not least, BPT. So oil prices, I think it's the first weekly or no monthly decline since November last year. As long as it's over $100, the divvy is going to be crazy for BPT. Their last divvy, I think, was April, so we have May, June, July. So I think it ended July's the next divvy announcement, and it's going to be like $2 or so. And you multiply the $2 times 4 if you just average it out. So let's say they're going to do an annual $8 divvy. You take the $20 stock price, and let's see exactly. I can tell you exactly what that is. So let's say 8 by 20, and well, right now it's at 20, right? So I might have to get off here in a second. So it's a 40% dividend. So dividend yield, and yeah. So that's kind of some of the reason why I continue to like this name for hire, despite hating. I hate's a harsh word. So is despise, but those are the kind of words that come to mind when I think of oil. So hopefully, all this does is expedite and accelerate adoption of clean energy, clean ways to clean modes of transportation. Oil's used in lots of products too, so there's so many uses for it that you hope this just situation with higher oil prices forces folks to look for other solutions. I think that's it. I don't know if I get on audio before the close. Sesame oil, Hang Song oil. What's that? That's oil. The hoisin. I don't know all these. I tried to make lo mein once, and I used all those oils I can't pronounce. But hope everybody has a great holiday weekend, and rock and roll. I'll be back.